Hello everybody, this is Toni Turner and welcome to the market now as of about 11 a.m. Eastern on Friday, April 21st. So far today, major indexes are down slightly as earnings roll in and investors brace for the first round of the closely contested French presidential election. Centrist Emmanuel Macron is leading most opinion polls for the election's first round on Sunday and is expected to contest a second-round runoff with Marine Le Pen, head of the anti-European Union and anti-immigrant National Front. Back here in the U.S. markets, of the 82 companies in the S&P 500 that have reported earnings through Thursday afternoon, about 75% have topped expectations, according to Thomson Reuters, above the 71% average for the past 4 quarters, so that's good. Overall profits of S&P 500 companies are estimated to have risen 11.1% in the quarter, the best since 2011. More good news. So on that note, let's look at 3 charts that could give us some insight into the week to come. Our first chart today is, as usual, a daily chart, I should say, of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely tracks our S&P 500 benchmark index. And if ever you want to know about the price of the S&P 500, all you need do is move this decimal point to the right 1 figure, and that is about what you'll find the S&P 500 is trading at. Okay, so as we look at this chart today, when I captured the SPY, it was trading at $234.79. At the moment, it's trading below its 50-day moving average, the green line on this screen, just at the 20-day moving average, which is the red line, and above these prior relative lows that it made in March. Now we know it made an all-time high in March at $240.32. Since then, the SPY, the S&P 500, has been kind of edging lower. Now it's actually moving into a wedge formation as we go into earnings season. On April 13th, it slipped, I should say on March 27th, for goodness sakes, March 27th, that's what I want to say, it slipped to a low right here, this candle of $231.61. Then it rallied back up above the 50-day moving average. That was positive, moved back down to this April 13th relative low of 232.51. So it made a higher low. That's a good thing. But since then, it has remained below the 50-day moving average. Now, the French election does have something to do with this. Of course, we can just say the whole geopolitical scene right now has quite a bit to do with the market's hesitation. As I said before, it is forming a wedge right here. So we'll have to see, can it break up to the outside and move back up toward 240? Can it do that during earnings season? Certainly we have enough good earnings coming out, possibly some more strong announcements to take the SPY back up to the 240 range. Will it move down and perhaps break below this 231 to 232 range right here? If it does, the SPY has pretty decent potential support here at 230, which is 2,300 on the S&P 500 itself. It has more support down at $225 or 2,250 on the S&P 500. Now we see the 200-day moving average, which is a long-term trend line really, coming in here at about 223 or 2330 on the S&P 500 right now. We certainly want the SPY to remain above the 200-day moving average for sure. What I would suspect would happen in this earnings season, if everything stays relatively stable, is that the SPY will stay potentially in a range from 231 to 232, perhaps on up to 240. We'll have to see if it has the legs, if it has the buyers, if it has the momentum to move back up and stay in this higher range, or if it just moves back and forth in what's probably going to be a pretty volatile earnings season. So stay tuned. Right now, everything is good. Again, we can exhale when the SPY moves back above the 50-day moving average. Our next chart today is going to be, we're going to look at least one more week at the iShares Russell 2000 ETF. If the S&P 500 are the large cap stocks in the U.S. market, and that's what they are, now we're looking at the small cap stocks in the U.S. market. And of course, this is the iShares Russell 2000 ETF, which follows the index of Russell 2000 small cap stocks. So we're kind of looking at what the difference is between these two indexes. It's very important. Now, as I've told you before, the Russell 2000 small caps have the ability to act as a leading indicator for the broader market. It's sort of like if the large caps move higher and call them the generals, but the small caps, we can call them the soldiers, don't follow the generals into war, then, or they don't follow them onto the battlefield, if the small caps don't follow, if instead they go their own way, then we know that pressures the large cap indexes. So when we look at the IWM right now, we see when I captured this chart, it's looking pretty good here. It's trading at $136.92. It made an all-time closing high on March 1st, just like the S&P 500 did. The IWM at this point made an all-time high of $140.36. Since then, it too has been edging lower, falling pretty dramatically in March below its 50-day moving average, actually down to 132.40. A relative low set on March 27th. Most indexes fell on this day. Now, again, it's back up now to 136.92, sitting just on top of the very important 50-day moving average, which is moving horizontally here. It's trading slightly above the 20-day moving average, which is considered to be a short-term trend line. We really want the IWM to stay above the 50-day. That would be very nice. Perhaps move on up to 140 again to its all-time highs. If it can't do that, then we definitely want the IWM to stay above this support zone at 133 and perhaps down to 132. But we do want it to stay above this line. I would think, again, if nothing destabilizing happens overall, that the IWM can at the very least trade in a range here between 132 and hopefully 140 before the next quarter takes over. So see what it can do here as long as it stays positive. Again, we can kind of exhale. Should it start moving down dramatically, then it could have the power to pressure the broad market lower. So keep the IWM in front of you and stay tuned. Our final chart today is one we haven't looked at in a long time. It's the iShares U.S. Aerospace and Defense ETF, symbol ITA. Now, it has 39 holdings. The top holdings are Boeing, United Technologies, Lockheed Martin, General Dynamics, and Raytheon. It made a recent all-time high here at $154, right up here, at $154.46 on March 3rd. Since then, it's moved down slightly and actually dipped to a relative low on March 27th, that day that most stocks did move lower, to $145. Now we see it's edging up slightly and has been moving up above its 50-day moving average, which is rising, and that's a positive sign. Now, when I captured this chart this morning, the ITA was trading at $151.26. Again, it's trading above the red line, the 20-day moving average, and the green line, the 50-day moving average. The RSI here is making a very, very gentle uptrend, which I like. The MACD is totally neutral here. I'm going to keep an eye on the ITA in the coming week here. As you all know, we are in earnings season, and ETFs are a good way, if you want to remain in the market during earnings season, ETFs are a great way to do that because they're diversified and they pose less risk than holding single stocks that could fall on a dicey earnings report. Now, as long as the ITA remains above the 50-day 50-day moving average, I'll look at it as a potential buying opportunity. Should the ITA roll south and fall below the 50-day moving average, if I'm in, I will exit the trade. And certainly if I'm watching it rolls down, then I'll take it off my watch list until I see it move higher again. And I'm going to be watching the ITA this week. If you'd like to see my comments on that, I am on Twitter at Toni Turner Trade. And now on to next week's economic reports. But first, please join us this coming Tuesday, April 25th at 4 p.m. Eastern for an exciting free webinar. I'll show you which side of the market to trade now. I'll show you 2 of our current trades in Toni's Market Club with entries, protective stops, and profit targets. This is a great opportunity for you to learn more about the current market, become a better trader, and make more money. So please join us. For the economic reports on Monday, nothing much going on. On Tuesday, we have consumer confidence and new home sales. Wednesday, we have our usual crude inventories. Thursday, we have durable orders, our weekly jobless claims, pending home sales, and our weekly natural gas inventories. On Friday, we have the Chicago PMI and the Michigan Sentiment Report. And again, we're right smack dab in the middle of earnings season, so the big market generals, the large caps that kind of rule the indexes, they will be pulling the market all over the place. Plus, of course, we have the French election. So there's a lot going on. Again, please join us for my free webinar this coming Tuesday at 4 p.m. Eastern, where we will be keeping track of what's going on. Don't miss out on this terrific opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.